Welcome to the Capital News. I'm your host, Alex Karitis. Today is Thursday, April 22nd, 2021. Thank you so much for joining me. The title of today's podcast, Job Market Distortions and Higher Taxes. So we're finally getting back to our economic roots. Thank goodness. It's been a crazy week with the Derek Chauvin trial, the social movements that have been taking place across this country, and waiting in anticipation for that guilty verdict. And was it truly the decision of the jury to go that way, or were they swayed? Were they concerned with mob rule, with self-preservation? If their identities were to be released, what would happen to them? So these are still big questions that remain out there, as far as I'm concerned. We cannot succumb to mob rule. Our republic will fail. It will crumble. It would have been a just move by the jury to come out and to explain themselves if they were to acquit Derek Chauvin, to say we do not succumb to mob rule. We are not going to tolerate the media spinning a story on tidbits of evidence as opposed to the totality of the circumstances of the situation. We're not going to tolerate rioting and looting and vandalism and injuring other people. We're not going to tolerate it just so you can get the verdict that you want. That's not how our system works, but this is what we're dealing with. We still have a system that is going to deal with an appeals process somewhere down the line. And again, I'm not saying Derek Chauvin should be acquitted outright or that he was completely innocent of everything, but I am saying that this is extremely problematic, and I'm trying to look at this from a big picture perspective, because this is not the end of this story. Like we said yesterday, we got Nancy Pelosi, the Speaker of the House, coming out and thanking George Floyd for dying. These people are crazy. Then you got AOC coming out and rambling like she does, like the other ones do. And she mentions how racial injustice contributes to the climate crisis. Let me repeat this. You heard me correctly. AOC is out there rambling, and in her sentence, in her speech, whatever you want to call it, she says that racial injustice is a contributing factor to the climate crisis. And you can almost see it as she was saying these things, that even her mush for brains was calculating, this doesn't really make sense, but we're just going to keep going with it. So let's just keep going and continue this sentence, continue this paragraph. We're not going to stop. Who are these people? Now, AOC might not be very influential when it comes to legislation, although maybe she's picking up steam if you get the Democrats on board with some sort of Green New Deal or some semblance thereof. But she is a national figure, and she is convincing people coast to coast. How scary is that? On her way of thinking. How scary is that? So I just wanted to mention that because these are the people that are at the helm. So you got, Demented Joe, you got Hyena Kamala, you got Crazy Nancy. You think these people have anything in common with like George Washington or John Adams or Thomas Jefferson? Anything at all? You think? This is how far we've come. It's only been a couple hundred years plus. And these are the jokers that we have to deal with on a day-by-day basis. And it's just as bad on the Republican side of the aisle as well. And we're going to get to some of this because job market distortions and higher taxes, again, is the title of today's podcast. So let's get to some market performance. We have the dollar index at 91.17. Some broad-based dollar weakness across the board. We got the British pound appreciating against the greenback by 0.2%. The Australian, New Zealand Kiwi are up against the greenback as well, both up about 0.3%. Bitcoin is currently trading at $49,400 a coin. So technically speaking, Bitcoin is in a bear market. It was well over 63,000 not too long ago, and a bear market is pretty much defined as a recent top and a drop-off of some 20%, which we are there now. So is this just a massive correction? Is this a bear market? Is this going to be it? Just technically speaking, hits the 20% drawback, drawdown, and now it's off to the races again. Of course, those who are major supporters of Bitcoin think this is going to be a buying opportunity. Of course, to those individuals, Bitcoin, there's no such price that is too expensive, that is too much to justify buying Bitcoin, which to me is emblematic of a bubble. Now, we live in a world of exponential. Okay, all of the charts and graphs that I like to show and discuss here on this podcast, we live in the age of exponential. Now, some people are aware of this. Some people have no idea what I'm talking about. But there are people that do know. And when I listen to these people, they are under the impression that this type of growth is just simply going to continue. All of it. It doesn't matter what it is, whether it's good or bad, depending on what data metric you're looking at, what asset you're looking at. We're in the age of exponential, so things are just going to keep on going. I do not buy into that argument. Being in the era or the age of exponential, to me, means we are in an environment that is extremely fragile and susceptible to internal and external shocks. And this is why I think we are likely going to continue to see these types of sell-offs. One asset class after the next. Because as quickly as these things can rise, that's how fast they can fall, and quite possibly even faster, because the saying is, you take the stairs up and you take the elevator down. And it's going to move with such quickness, with such speed, that people are not going to be able to exit their positions in time. That's what I believe. I could be 100% wrong about that, but I really don't think so, because of how fragile the system is, because it is built on a foundation of sand. It is completely artificial. We are the economy of the living dead. It's one zombie corporation being propped up or created by the day. By the day. It is getting worse by the moment. And we're going to get to the Federal Reserve's balance sheet momentarily as well. And you guessed it, hitting another all-time record high. Now, because of higher taxes coming down the pipeline, this is what Joe Biden is talking about. This is what the Democrats are pushing for. And they're likely going to happen in some form. Because you cannot run trillion-dollar deficits with this being the case, with not having higher taxes at some point down the line. I have been mentioning this since 2019 when I started this podcast, because we were running trillion-dollar deficits before COVID-19. The global economy was rolling over before COVID-19. Don't ever forget this. COVID-19 is just this nice coincidence that gives the powers that be cover to justify the unjustifiable, which of course we have been witnessing for the past, what are we on here, 14, 15 months now, or getting close to it. So higher taxes are coming to offset it, and we're already having to deal with the hidden tax of inflation, and that too is only going to get worse. So it's going to be a double whammy of direct taxation and the inflation tax. There was no way out of this whatsoever as far as I was concerned, and I've been stressing this for the past couple of years, and now we're going to start seeing it. And a lot of you are already seeing it. You have property prices going up. What do you think what do you think is going to happen there? You think those property taxes are going to go up too? Oh, you better believe it. So people can say, oh yeah, great. Prices are up. We got a booming housing market, blah, 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 blah. Wait till your taxes go up on this nice new property you bought too. With this news, with this backdrop, at least this is the narrative as to why stocks were selling off today. But we have overnight futures trading. We have the Dow Jones up about 0.2%, as is the S&P 500. The NASDAQ 100 is up about 0.1%. A sell-off cash trade in Japan, giving back about 0.7%. Japan is about to announce an emergency, a state of emergency in Tokyo and Osaka, obviously pertaining to rising COVID-19 cases. Pretty much a sea of green across the board in Europe today. Cash trade in Australia is currently flat, as are Chinese stocks. Now, with Bitcoin trading under 50,000, let's look at the price of Tesla, which is currently down today 3.3%, trading at $719. And the reason I pinpoint Tesla is because CEO Elon Musk mentioned how they purchased Bitcoin, $1.5 billion worth, a couple of months ago. So we'll see what type of impact this has on the share price of Tesla moving forward. On the commodity front, WTI $61.82 a barrel, Brent $65.71, natural gas $2.75. Gold and silver had a little bit of a pullback today, so a nice little correction over the couple-day run we had there with gold and silver, so that's somewhat nice to see. You don't want to see things go straight up. You want to see these types of corrections here and there. Gold, $1,783 an ounce. Silver, $26.08 an ounce. Copper, $4.30 per pound. And the price of wheat, well, that keeps going up as well, over $7 a bushel. I don't think we've been there since 2014, I think it was. Let me look. Somewhere around there, maybe even before. Let me see. Yeah, it's been quite a while. It's been 2013, 2014, yeah. So there's no inflation, though. You don't have to worry about it. Anything you're going to eat, don't have to worry about it. Coca-Cola is going to raise their prices. Procter & Gamble is going to be increasing their prices. They've already announced it. Who else did we talk about before? Kraft Heinz, ConAgra. It's all here, folks. It is only going to get worse. It is not transitory. Because if you want to believe it's transitory, what you have to believe is that these companies are going to then reduce their prices. It's not going to happen. They're not going to have any incentive to do so whatsoever because there's not going to be competition to challenge them. Because in the midst of all of these lockdowns, we have decimated small and mid-sized businesses. They are gone. So there is no competition like there should be. This is all a part of the game. It's all about consolidation. It's all about power, and they continue to do this. And now you're starting to hear on the media a little bit of a drop-off when it comes to the vaccines. So how do you think they're going to end up spinning this narrative? Oh, we got cases going up because there's not enough people who are vaccinated. Supply is outstripping demand for these vaccines. So we're shutting down some sites because nobody wants to come get vaccinated. Whoa, you should have done so because now cases are likely going to go back up. That's going to be their narrative. They'll start spewing that, and it'll be round 2, 3, 4, whatever round we are of further lockdowns most likely coming. And it's going to be your fault because you don't want to take the experimental vaccine. Uncle Sam's 10-year junk note, 1.56%. Okay, it's a little changed from yesterday. And again, we want to continue to ask that question. If rising yields are indicative of a growing economy, wouldn't lower yields be indicative of a weakening economy? That's a question that needs to be asked, just for the basis of common sense, just to get it on the record. Ask Jay Powell this question. Ask our dingbat Treasury Secretary Janet Yellen this question, just to get these people on record. Because our central bank thinks it seems to be indicative of growth if we have these higher yields on the 10-year. Meanwhile, the Reserve Bank of Australia and other central banks were concerned when their borrowing costs went up. They were concerned. If it's growth, why would you be concerned with growth? Don't you want growth? Or are those other central banks concerned that it means it's inflationary? That the bond market is starting to sniff out inflation? We'll keep monitoring this, of course, because this is really the big story of the day. So let's get to the Department of Labor report, initial jobless claims. So for the week ending April 17th, on a seasonally adjusted basis, the figure came in at 547,000. So it's nice to see a continuation within this range. It is still over double where we were before COVID-19, but nonetheless, it is well below the 800,000, 700,000 average that we have been witnessing over the past year. Again, 547,000. On a non-seasonally adjusted basis, the number came in at 566,000. For the week ending April 10th, continuing jobless claims seasonally adjusted, 3.7 million. Non-seasonally adjusted continuing claims came in at around 3.9 million. For the week ending April 17th, the Pandemic Unemployment Assistance Program comes in at 133,000. So when you take these in aggregate, the 547 and the 133, we're at 680. So we're getting closer. We are finally getting closer to being where we were during the depths of the great financial crisis, and perhaps next week we will be lower than that. During the depths of the great financial crisis, initial jobless claims peaked at about 665,000 for several weeks. We haven't been below that number in aggregate since last year. Okay, now obviously apples to apples, it's just straight up initial jobless claims for regular state unemployment benefits. So on that metric, yeah, the 547,000 is clearly less than the 665, but nonetheless, we have the PUA to contend with this time. So that's how bad it was. We didn't have the PUA or the PEUC during the great financial crisis, but we have it this time during COVID-19, these lockdowns and restrictions. So that's something to be mindful of as well, because that gets lost in the noise. The focus is just on that regular state unemployment figure, again, the 547. So taking all of these claims in aggregate, regular state, federal employees, newly discharged vets, the PUA and PEUC programs, extended benefits, state additional benefits, and work share program gives us a grand total of 17.4 million Americans who continue to claim benefits. 17.4 million. This is for the week ending April 3rd. Recall that the aggregate number lags by a couple of weeks. Nonetheless, 17.4 million is a week-over-week increase of some 492,000. The biggest decrease week-over-week was with respect to regular state benefits. The biggest increases week-over-week were with respect to the PEUC program, up 447,000, and the PUA program up 265,000. Okay. 17.4 million gives us a de facto unemployment rate of about 12.5%, which is still double the official unemployment rate, which currently sits at 6%. And then the first Friday of May, we will get the official jobs report, and we'll see where we are there. So a lot of that coming, but job market distortions continues to be the scene as far as I'm concerned, as I have stated since last year, with the PPP programs, with all of the direct checks, with all of these programs. It's going to be very difficult to get a true picture of what's going on in the jobs market. And what are we witnessing right now with these numbers coming down? Is it because people are finding jobs? Is it because there's actually demand back there in the economy? Or are we just hitting a limit, right? There's going to be a point where there's only so many more jobs that can be lost, right? So you have to contend with that too. And then you also have to contend with the amount of open positions that currently exist, and nobody wants to fill them. And the reason nobody wants to go back to work is because a lot of people are getting paid more not to work, because they're collecting unemployment benefits. They're getting stimulus checks. They might not even be making more per se on an hourly basis, but the cost of going to work, they don't have to contend with, and they say, well, you know what, 6 in one hand, half dozen in the other, but I like my lazy boy. I like being able to do what I want when I want. I don't want to have to contend with traffic. I don't want to contend with, if you're a woman, putting on your makeup, doing your hair, and getting ready for work an hour before you got to go, then dealing with traffic, etc., etc. I don't want to have to go out to lunch every day with my colleagues and spend lunch money. I don't want to go get a cup of coffee every few hours with somebody who wants to go get coffee, and you save up a lot of money. Plus, a lot of people may just not like what they were doing for a living. So they're going to ride this wave out. We are creating a zombie population. We got zombie corporations. It's the economy of the living dead. And we got people who are being conditioned to simply take a check from Uncle Sam. And Uncle Sam is broke. But people don't understand this. They couldn't care less. They don't know, but they will. They will. And by the time they realize it, it's going to be too late. It's like the sheep being taken to slaughter. By the time they realize what's going on, it's too late to run away. That's all I'm saying. On to the tax hikes here. All right, let's just take a look at what we're looking at, what we're dealing with. $28.2 trillion is our U.S. national debt. Congratulations, $28.2 trillion. We are currently expected to spend $7.8 trillion this year alone. Let me repeat, $7.8 trillion. Nobody on this planet can comprehend that number. That's twice the amount of tax revenue that we bring in. So again, I asked the question, why are we paying taxes? If the nearly $3.5 trillion in taxation that we bring in is not acting as some sort of constraint to the amount of spending that we're willing to partake in, then why do we even have taxes to begin with? This is going to give us a deficit this year of about $4.3 trillion, which is more than our tax base. Our deficit is more than our tax base. How can anybody say that this is an economic recovery with a straight face? How can anybody claim that this is free market capitalism? How can anybody think that we are not a banana republic? Because we are. We most definitely are. $8 trillion in spending this year alone. A $4.3 trillion deficit. And they're not done. This is just as it stands today. This is not projections. This is just as it stands today. What happens if they come down with another spending bill of $1 trillion here, $500 billion there, $600 billion there? It adds up quick. And what do we get for it? No, absolutely nothing. Don't worry about it. Can't explain it, right? Why doesn't anybody understand what's going on? Well, who's in charge of the education system? Oh, that's right. The government is. The government is. We can't teach our kids reading, writing, and arithmetic, but we can teach them about the 33.5 genders that exist and how racial injustice contributes to the climate crisis. That we can teach them, and that they'll regurgitate and they'll understand. We won't outcompete the Chinese or anybody else with respect to math or engineering or anything else for that matter, but we respect the 33.5 genders that exist and the nonsense of racial injustice being a contributing factor to the climate crisis. So as long as you understand those things, then you can sort of connect the dots and say, oh, well, yeah, we got $28.5 trillion in a national debt, and we're running a budget deficit of $4.3 trillion. Well, that kind of makes sense. That kind of makes sense. So why have I been explaining to this audience for the past 2 years why taxes were going to go up? This is exactly why. And the Republicans and the conservatives who want to argue for tax cuts, listen, I'm all for tax cuts. I want to abolish the income tax. I want to abolish the Federal Reserve. But if you're going to cut taxes, you have to cut spending. It's just that simple. You have to do it. Otherwise, you're going to end up running these types of deficits. It's not difficult. We're only solving half of the equation. And if you only solve for half of the equation on the math test, you're going to fail. You're going to get a 50%. That's an F. Why our people can't figure this out is beyond me, except we kind of understand why. Because you have to understand GDP, gross domestic product, how that's calculated. Politicians don't want to take a hit to GDP, not in the short run, even if it's for the betterment of the long term for our country. They don't want to do it. The incentives aren't there for them to do it. And when we cut taxes, that was the Trump administration. And there was no way Donald Trump, within his power, was going to allow GDP to take a big hit. There was no way he was going to allow the stock market to be negatively impacted. Because he hitched his wagon to the stock market as the barometer for his success, like an idiot, like I said. He could have done so much more for this country and truly had been the strongman that he projected to be and pretended to be. He actually could have gotten a lot more done. But he was concerned if the stock market sold off. Well, you got to roll your sleeves up. You're going to get dirty. Yeah, you might have a sell-off in the stock market. But if it's for the betterment of the country in the long term, well, you're just going to have to make that sacrifice. He didn't. He didn't. And because of it, we're dealing with those consequences of these deficits, national, federal budget deficit, or trade deficit. We're not winning, folks. We are not winning, not by a long shot. In fact, we're losing quite a bit, and there is no end in sight. Which takes us to the Federal Reserve's balance sheet, because this is how we're going to continue to prop all this crap up. So the Federal Reserve's balance sheet is at $7.82 trillion. $7.82 trillion. This is an all-time high. This is a week-over-week increase of some $27 billion. And, of course, the trajectory is continuing higher because the Fed will remain committed to at least $120 billion per month of asset purchases, those assets being U.S. Treasuries and mortgage-backed securities. So despite the supposed fact, according to the Federal Reserve, that we are on our way to recovery and that the housing market, with housing prices at all-time highs, I guess somehow that still means that we're not quite there yet, and we have to continue to finance Uncle Sam and continue to buy all of this. I guess it's junk. I guess the mortgage-backed securities are still junk. You solve that riddle. This was supposed to be temporary. During the great financial crisis, this was the grand experiment. Just temporary, just to get us out of it and don't have to worry about it. Quantitative easing, this experiment of purchasing U.S. Treasuries and mortgage-backed securities, and some other assets as well because of the emergency powers and emergency facilities that the Federal Reserve implemented due to COVID-19, corporate bonds. Now, they're not doing that. It's back to the Treasuries and mortgage-backed securities, but nonetheless, they did it before. They can do it again. This quantitative easing, it's transitory. It was temporary. This thing's about to, apply for a driver's license, as I've been saying. So the same jokers that said this policy was going to be transitory or temporary are the same jokers that are telling us that inflation is not going to exist. But if it does, it's only going to be transitory or temporary, nothing to worry about. And if it does get out of control, we have the tools to take care of it. Now, the only tools that they have to take care of it are to increase interest rates. Now, if you increase interest rates, we already know on several occasions during this experiment, if that happens, stock market's going to take a dive. And it's not going to take a very large increase to interest rates or to the Federal Reserve tapering their balance sheet to prick this everything bubble, because we are in the age of exponential. This bubble is extremely, extremely fragile. So they're not going to do it. They're trapped. So that's the decision they're going to make at some point. They're going to have to increase interest rates. They're going to have to taper their balance sheet, prick this bubble, or they're going to have to attempt to fight inflation with more inflation to keep this thing going. Blow the bubble even bigger, and then it'll just be a matter of system exhaustion unless there's some other geopolitical event that also pricks it and just confidence, washes away. Interesting times, to say the least. 547,000 Americans filed for initial jobless claims for regular state unemployment benefits. Federal Reserve balance sheet, $7.82 trillion, an all-time record high. Tax hikes are coming across the board because we got to pay for the $8 trillion in spending we're going to do just this year alone to get very little or nothing for it. But ain't it great to be in this country? Job market distortions and higher taxes. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Karitis. Godspeed.